Hello and welcome. You're watching Business Today Television. I'm Tanya Aneja and this is Market Today, a show where we'll get you all the latest market updates, stocks and sectors that are buzzing in and much more. And well, let's look at the markets right now. It seems that no Monday blues for the bulls. 19,680 on Nifty, 116 points uptick there, and 66,465 on Sensex. Record highs for the Indian markets. And let's take a look, where's the party happening at this point in time. And if you look at the broader markets as well, they also continue to outperform. Clearly, Nifty small cap index 11,430 there, over 100 points rally that we are seeing in that particular index. Mid cap also performing really well today, and apart from that, let's pull up some of the gainers for you. Clearly 125 points uptick there on Nifty mid cap as well. So let's pull up some of the gainers for you from today's trading session, and it's clearly the IT pack and Reliance that is leading the rally. Wipro among the top losers, up around 2.6% in today's trading session after the numbers. Grasim, Reliance Industries, absolutely, I think it's the stock that is leading the rally on Nifty and Sensex. It's up around 2% ahead of its Q1 numbers, and of course the demerger. And Adani Enterprises, Kotak Mahindra Bank, Tech Mahindra, these are some of the other stocks that are buzzing in today's trading session. Let's look at some of the top losers. Hero MotoCorp, ONGC, they are not supporting the markets at this point in time, up around 1.5%. And M&M, Tata Motors, NTPC, these are also among the other top losers, down around 1% in today's trading session. Now, some of the IT counters, they are not supporting the rally that we are seeing. TCS is one of them. Titan, JSW Steel among the other top losers. But let's look at the sectors that are trading really well and that are supporting markets at this point in time. So clearly it's the media sector, and then we have PSU banks also supporting the rally. Healthcare, consumer durables, these are also among the sectors that are trading in the green at this point in time. And also on the flip side, we have auto FMCG that are not really participating in today's rally. So where are the markets headed going forward, and which are the stocks and sectors that you can bet on? To discuss this, let's welcome our guest on the show today. We have with us Mr. Nilesh Jain, who is the AVP of Technical Research at Centrum Broking. Thank you so much, Nilesh, for taking the time out. And clearly, record highs for the Indian markets, and 19,600 on Nifty, Sensex also above that 66,000 mark. What's next for the Indian markets? I mean, it's 20,000 mark, not really far away.
Very good afternoon, Tanya. Well, if you look at the overall structure, we have been bullish on the Indian equity market since a long time. And now, given the fresh breakout that we witnessed on Friday, I think this momentum, this party is not yet over, and we can expect further momentum to continue. 20,000 is what we are eyeing on for the July series for the Nifty index. And if you look at today's move, we saw a positive start, and throughout the day, we have seen across the sector buying can be seen. And specifically, Nifty Mid Cap Index, Nifty Small Cap Index, both are participating in this rally. That is certainly giving a positive sentiment. Now, the laggard that was the private sector bank, specifically the Bank Nifty, where we have seen participation in today's trading session, and it has negated the formation of lower top and low bottom. And looking at today's breakout, I think Bank Nifty should lead the rally from here on, and we can expect Bank Nifty to touch the levels of 45,600 to 45,000. For the Nifty index, as we mentioned, the immediate target that we are expecting is of 19,800. Followed by that, we can expect Nifty to move towards 20,000 mark. 19,500 is the new support now. We have witnessed a positive development on derivative data as well. The put writers have shifted their position towards 19,500. So the new trading range for the Nifty looks like 19,500 to 20,000. Any decline could be a good opportunity to make a fresh entry, wherein stocks and sector specific action which we believe that likely to continue.
Okay, absolutely. 19,500. Keep an eye on that. And Nifty Bank is also participating today. If you see 45,253 level on that particular index. And if you talk about HDFC Bank, Nilesh, the bank reported better than expected numbers. And this is the first earnings of the bank following the merger with HDFC. And the bank posted around 30% year-on-year rise in its net profit at 11,952 odd crore rupees. So, where is this bank? Where is this stock headed going forward, and what are your thoughts on this particular counter?
Well, Tanya, if you look at the overall broader structure for the HDFC Bank, it has been in a stellar up move, and we have seen a formation of a high top and high bottom in HDFC Bank as well. Although some amount of profit booking was recently witnessed on the back of merger news of HDFC twins, but I think today, post numbers, we have seen a smart recovery and a strong pullback that basically indicates that it is getting ready to move towards 1700 mark or maybe beyond that. But it's a good bet to add on to the portfolio on declines as a positional target of 1800 plus. On immediate basis, we are expecting 700, 1700 to 1750, whereas support is placed at 1640. So overall, from Bank Nifty space, in fact, if you look at the overall today's move in the Bank Nifty, that was primarily led by HDFC Bank, followed by ICICI and Axis Bank. So overall, in the private sector bank, we are liking HDFC Bank, followed by ICICI Bank and Axis Bank. These are the few counters that can be added on decline.
Okay, absolutely. So that's the verdict as far as HDFC Bank is concerned. And also, if we talk about IT counter, IT sector, Nilesh, I mean, while TCS June quarter numbers did not lead to upgrades, HCL Tech figures were an all-around, miss, and Wipro's weak guidance also drew bearish comments. But stock prices have another story to tell. If you see at this point in time, also Tech Mahindra, Wipro. These are the stocks that are, among the top gainers on Nifty and as well as Sensex. So, what are your thoughts on IT sectors, and is the worst really behind? If you talk about this particular sector, and any stocks
Right.
that you like?
Absolutely. So, from the Nifty IT space, we have witnessed a smart recovery in last three straight session. And if you look at the Nifty IT index chart, it is very interesting. It has today tested the highs of 31,600, 31,500 sort of zone, and that is the exact level where we have seen a top formation in the month of February 2023. And from those levels, we have seen a sharp sell-off. And exactly at those levels in today's trading session, we have witnessed some amount of profit booking. So clearly, we need a decisive breakout above 31,500. A decisive breakout is still awaited. And post that breakout, we'll get a confirmation of a short-term bottom for the Nifty IT index. And in last three consecutive sessions, what we have witnessed is nearly a pullback rally in the Nifty IT space. So at current level, the risk and reward is not that much favorable. So I would rather wait for some profit booking to happen. Then post, then we can expect a fresh buying. But a couple of stocks that we are liking from this particular space, primarily Tech Mahindra, that counter is looking very much positive for upside target of 1270 to 1300. The stop loss can be placed below 1210. So that is one counter that we are liking. Apart from that, Coforge. This particular counter has been one of the outperformers from the Nifty IT space, and it is inching towards its previous all-time high mark. So structure-wise, looking positive and getting ready to move towards 5200 to 5300. Can be bought on declines, keeping stop loss below 4850. So these are the two specific counters that we are liking, and our focus is basically on mid cap and small cap ITs rather than the large cap. So large caps, it is better to wait for some confirmation on the technical parameter, but mid cap and small cap ITs are looking very much positive.
Okay, absolutely. And by the way, Coforge is gonna report its earnings on Thursday, and there are a couple of stocks that will be in focus, and it's gonna be an action-packed week, Nilesh. We have, IndusInd Bank, and we have Tata Coffee, we have Coforge, HUL, Emphasis, and then ICICI Bank, Kotak Mahindra Bank, Yes Bank. These companies, these banks will report its earnings in this week only. Any stocks, that you like ahead of especially Q1 earnings?
So the name that you have suggested out of this IndusInd Bank is one counter where we have seen a good performance and a strong rally in last couple of days. Now it has reached the levels where a breakout is awaited above 1400. We can expect a fresh momentum to continue towards 1420 to 1450. So we still need breakout which is awaited, and any long position can be can hold for the upside target of 1420 to 1450. At current level, we are not advising to go long because the risk and reward is slightly not favorable. But as we mentioned, from the banking space, we are still liking ICICI Bank, Axis Bank, and HDFC Bank. So it is better to wait for result to span out post, then we can review the portfolio.
Okay, absolutely. It's a wait and watch situation right now. And also, if we talk about Reliance Industries, also the company is going to post its numbers on Friday, coming Friday. So, and the company is also, gonna de-merge its financial services business. So, how to really trade Reliance Industries ahead of Q1 numbers?
Very strong chart pattern if you look like on the weekly as well as monthly time frame. It has formed a big rounding bottom on the daily time frame chart. And the previous all-time high that we saw last year in the month of April near about 2850, that is likely to be tested very soon. And
Okay.
post then we can expect Reliance Industries to move towards 3000 figure. So all-time high is what we are expecting from the Reliance Industries can be added on declines. Very strong chart pattern, and if somebody is already holding can stay put, keeping stop loss below 2740. That should be the stop loss for the fresh long positions as well. And our target of 2850 on immediate basis and 3000 positionally are very much intact.
Okay, absolutely. And SBI is now the top gainer if you see the Sensex on Sensex pack. So, how should one really trade SBI, Nilesh? And what are your thoughts on entire PSU pack?
Well, entire PSU Bank are looking very much positive. We are liking State Bank of India specifically because being a large cap from the PSU banking space, the structure it is quite stable, and we have seen a gradual upmove in this particular counter. Today, we have witnessed a fresh breakout above 600 and looks very much positive on the upside target. If you look at that, comes around 630 to 650. So that should be the target. That should be the target for the July series, and can be added on declines. It's a good positional bet as well as a portfolio stock, and the stop loss should be placed below 585. And we are liking SBI. We have our buy recommendation as well as a part of a disclaimer for the upside target of 650.
Okay, absolutely. And lastly, Nilesh, any trading ideas that you would like to recommend to our viewers, especially for the near term?
Right. So there are two specific counter that we are liking from the cement basket. We are liking grassing today. It has given a fresh
Yeah.
breakout after a long time. So if you look at on the weekly time frame chart, it is forming a symmetrical triangle sort of formation. If it sustains above 1800, then we can expect the momentum to continue towards 1820 to 1850. So that should be the target on the higher side. 1775, that should be the stop loss. And the second counter that we are liking is from the IT space that we just now discussed, KPIT Tech. This particular counter has witnessed a gradual decline. Now today it has broken out from its falling wedge sort of pattern on a daily time frame chart. The upside target that comes around 1125 on immediate basis, positionally 1150 to 1180 can be seen. One can buy KPIT Tech keeping stop loss below 1070 for the upside target of 1120 and 1150.
Okay, Nifty, by the way, has crossed that 19,700 mark as well. So another, historic day for the Indian markets, and bulls are completely in action as we speak. On that wonderful note, thank you so much, Nilesh, for sharing these wonderful ideas with us and being with us here on Business Today Television. Thank you so much. Okay, markets on a roll clearly. It's 66,597 on Sensex, Nifty now 19,700 mark. For the first time, Nifty has crossed this particular important level, 19,730 on Nifty, 165 points uptick there, 66,655 on Sensex. Bulls clearly in action as we speak, so no Monday blues. So with that, it's time to wrap up this edition of Market Today, but stay tuned for all the latest market updates, and many thanks for tuning in.
Hello and welcome to Business Today Television. I'm Karishma, and joining me today is Secretary Revenue, Mr. Sanjay Malhotra. Sir, thank you for joining us on India Today Group.
My pleasure.
I'd like to start off by, of course, asking you about the big decision that the 50th GST Council made, and this is on the 28% on GST on online gaming. Now, while Madam Finance Minister has reiterated that it has been a unanimous decision, I'd like to understand from you what has been the major motive behind this. Is it the social angle? Is it the revenue angle?
Yeah, so first thing, see, it is only a reiteration, as you said, or a confirmation of the earlier stand of the department that online games, when played for stakes, as opposed to online games, not played for stakes, will be taxed at the rate of 28%. There was certainly a consideration, because when we are imposing any tax, considerations of equity and fair play and what other similar activities, how they are being taxed and at what rate is important. And so if you compare online games with entertainment, even if you compare it, with entertainment, some of the entertainment activities like entry into sporting events, for example, IPL, or just the mere entry into a casino or into a horse racing club, these also attract a rate of 28%. And in fact, some of the members even compared the tax rates being presently paid by the online gaming companies, which effectively worked out to only about 2 to 3%, with the tax rates on food, which even a common citizen consumes and pays taxes on them, where the tax rates are of the order of at least 5%. If not, for some of them it goes up to even 18%, as you are aware. So in line with that, certainly, yes, the social angle, the social dimension, the equity angle, all these things were considered, and you are aware that this has been a deliberation which has been going on for a very, very long time. So it was a well thought out decision. It was taken after due consultations with all the stakeholders, including, the casino industry, the online gaming industry, and keeping the overall public interest in mind.
Great. You did mention about the casino industry, and I'd like to just get some information on this. Now, Goa and Sikkim, these two states, there were early reports that they were against the decision because, of course, casinos gets their maximum revenue from their tourism aspect. Was there some kind of discussion on if they would be helped in some other way, or were they okay going ahead with the 28% on whole?
No, all discussions relating to all the three games, three activities, that is online gaming, horse racing and casinos, all these were considered. It is not the mandate of the council actually to go into other aspects of revenue or compensation, and so those were not deliberated upon.
Great, got it. So one question, of course, this has been a decision that you've been deliberating on for long, but if I may ask, have these online companies started to reach out to you, because they're clearly unhappy with the decision, and they're expecting if the government could review or expect a rollback in some or the other way?
We had the GUM, you are aware that there was a GUM, a group of ministers, which was formed. It submitted its report. The report was sent back to the GUM by the council. So the GUM again, looked into it. They consulted the online gaming industry, as the others, as I mentioned earlier. Even I had personally met, the gaming industry, representatives of the gaming industry, before this decision was taken, to understand the whole issue and their views. They have not reached out. As of now, they have not reached out, but they are welcome to reach out. We are always open for consultations, but whether the decision will be reviewed, that's not something for me to decide. It's the council's decision. The decision has been taken just recently. It has been taken after due deliberations. It has been taken after consultations. And so in light of that, I really don't think that there is any possibility of reviewing the decision on merits. Yes, there can be discussions on, there is room for discussions on how you implement it going forward, because, while, as I said, The taxes have to be, equitable, they have to be efficient, they have to be also, easy to implement. So if we have to implement them, how easy we can make it for the gaming companies and for the others, while keeping the principles of taxation and the decision of the council in mind. Those respects, and they are always, even otherwise, they are always welcome to make their point of view. But insofar as the review on the principles, I really don't think there is much of a possibility.
Okay. So this will require an amendment, as we also discussed the other day during the press conference, and likelihood that you will also have to file a plea in the Supreme Court.